It's time for our topic of the week here at Economic Outlook. The Central Bank of the United States has finally cut its key interest rate for the first time since 2020, signaling the end of the rate hiking cycle, which will give central banks in Asia, including Bank Indonesia, more flexibility to ease monetary policy.
The U.S. Federal Reserve cut interest rates by half of a percentage point on Wednesday, kicking off what is expected to be a steady easing of monetary policy, with a larger than usual reduction in borrowing costs that followed growing unease about the health of the job market. The Fed's new summary of economic projections showed policymakers see the Fed's benchmark rate now at between 4.75% and 5%, falling by another half a percentage point by the end of this year. Another full percentage point in 2025 by a final half of a percentage point in 2026 to end in a 2.75% to 4% range. In a post-meeting press conference, Fed Chairman Jerome Powell said the central bank forecast for the path of interest rates cuts don't imply an urgent process, and that it doesn't think it waited too long to begin easing, Reuters reported. In theory, lower interest rates help stimulate economic activity and boost employment. The rate cut can also raise share prices as investors move their investment in fixed income financial instruments to equity markets to seek higher gains. Markets in Europe and Asia shot higher on Thursday, following the announcement of the Fed's rate cut. In Asian trading, Tokyo's Nikkei 225 index rose 2.1% to 37,155, while Hong Kong's Hang Seng gained 2% to 18,013, and the Shanghai Composite Index climbed 0.7% to 2,736.02. In Indonesia, the Jakarta Composite Index or JCI rose 0.97% to close at 7,905 on Thursday. The cut in the Fed interest rate should give Indonesian Central Bank or Bank Indonesia more room to ease its monetary policy. Bank Indonesia has been in dilemma in lowering its interest rate because cutting rate could trigger foreign fund outflow that could in turn lead to a further fall in the Indonesian currency. Although the inflation rate has been on track in recent months, the central bank refrained from cutting its key rate on fear it could trigger foreign fund outflow. But this time around, however, Bank Indonesia seems to be more confident. Bank Indonesia unexpectedly trimmed the benchmark rate by 25 basis points to 6%, its first rate cut since February 2021, the day before the Fed's rate cut announcement. However, it is not certain yet if the 25 basis point cut in Bank Indonesia's rate is big enough to prevent foreign fund outflows and maintain the stability of the Indonesian currency. Rupiah gained 0.36% to 15,239 per US dollar at the close of the trading on Thursday. The cut in the interest rate should, in theory, be able to stimulate economic activities, as it would give commercial banks room to lower lending rates for business activities. However, the small size cut in the BI rate will unlikely result in a significant drop in lending rate.
The U.S. Federal Reserve cut interest rates by 50 basis points last week to between 4.75% and 5% last week, signaling the end of its rate hiking cycle that has taken place for about 4 years. And joining us today via video call is Joshua Pardede, the Chief Economist of Bank Permata. He will discuss the impact of the U.S. Central Bank's jumbo rate cut on the global economy and also, of course, Indonesia. Hello, Pak Joshua, how are you?
Hello, Luisa. I'm good. Thank you for having me.
Thank you for being here on Economic Outlook today to share your insight. First of all, Pak Joshua, the U.S. Federal Reserve surprisingly cut interest rates by a half of a percentage point or 50 basis points to between 4.75% and 5% on Wednesday. What is the impact of the Fed's jumbo rate cut on the global economy?
Yeah, I think there are some several impacts on the U.S. Federal Reserve rate cut, 50 basis point in the latest meeting in September. The first one, I think there will be an impact to the cheaper dollar financing, since the rate cut in US could often result in lower global borrowing costs, yeah, for companies and governments that rely on the dollar-denominated debt. And then the second one, I think it will also boost the US and global demand. The lower rates in the US also may support the domestic consumption and business investment globally, which could increase the demand for goods and services for trading partners globally. And then for the impact from the to the emerging countries, I think in historical speaking, we've seen that whenever U.S. Cut interest rates, it will lead to the global investors flows, yeah, to the emerging countries, because the global investors rationally will seek for the higher yields, yeah, in emerging countries. And then of course the impact, the current impact from the U.S. interest rate cut, I think the dollar, yeah, the dollar weakening dollar, indicated by the weakening in the dollar index, yeah. So far, I think as per this morning, dollar index has weakened roughly 1%, yeah, since beginning of the month. And then on the contrary, I think whenever the U.S. dollar continue to weaken, on the other hand, I think this would lead to also for the appreciation in the commodity prices. So that's why, and then including also, as mentioned earlier, about the global stocks. Yeah, we've seen that lower interest rate can boost the global stock market. Yeah, since the cost of capital for the business decreases, and then potentially will lead to the higher profitability from the corporates. So I
Okay.
think we've seen that the lower interest rate could have positive impact to the emerging countries and also for the global economy.
Okay, in summary, this U.S. Federal Reserve's cut will bring a better economy. It will boost the U.S. global demand and as well as trading internationally. Now, Pak Joshua, can you also explain to us what does the Fed rate cut mean for Indonesia?
I think the meaning, the immediate meaning, I think impact, yeah, to the Indonesian market or Indonesian economy, because we've seen that also will lead, because at the first place, in the midst of the weaker dollar, of course, rupiah tended to be appreciated, yeah, against US dollars, and then in the short term, also we can see that capital inflows, yeah, to the, I think, have been increasing. Yeah, has been increasing in the last couple months. Yeah, since third quarter this year, and then of course the impact to the monetary policy due to the lower U.S. interest rates. Of course, this would lead to the room for the BI rate cut in the near term. Yeah, as we also heard from the when the BI rate decision, governor of BI mentioned that if the U.S. Tend to be decreasing in the near term, of course, this would lead also for the greater room for the BI rate cut. And then whenever the dollar continue to weaken, I think from the government perspective, this will lead also to the lower external debt burden. Yeah, and then for the yeah, with regard to the trade and exports, because of the expectation for the increasing global demand, yeah, due to the support from the monetary policy, we can see also expectation for the Indonesia's export performance in the next 1 to 2 years could be still maintained in the good shape. And of course, lastly, I think this will lead also for the appreciation in the IDR-denominated assets, yeah, like IDR bonds and then GCI, as well as we can see also that rupiah has been strengthening against US dollar, nearly or heading to the 15,000 level.
A nice summary right there, Pak Joshua. Now, speaking of the Bank Indonesia's rate cut, Bank Indonesia has lowered its reference rate by 25 basis points to 6% just one day before the Fed announced its rate cut. Is the 6% interest rate high enough to prevent foreign fund outflows from the country? What's your opinion on this?
Yes, of course, Bank Indonesia consider there are two considerations. The first one is the inflation expectation in domestic inflation expectation, and then the second one is rupiah exchange rate. Rupiah exchange rate could be determined by the interest rate differential, yeah, between BI and then the Fed. Of course, the Bank Indonesia will monitor, yeah, in the near term until the medium term, what is the expectation of the Fed rate cut in the future, because FOMC just already mentioned that in the next year, the Fed has a room for the rate cut about 100 basis point. So by the end of 2025, the Fed rate should be around 3.5%. Yeah. And then what about Bank Indonesia rate or BI rate? I think BI rate should be maintained, yeah, at the meaning that the differential rate should be maintained, yeah, to attract foreign flows to the Indonesia market. So that's why I think by maintaining the interest rate differential remain attractive, I think this also could be one of the consideration to be taken by Bank Indonesia in order to support rupiah in the near term and as well as in the medium to longer term.
Now, speaking of the future, the Fed actually plans to gradually reduce its reference rate to below 3% by the end of 2026. Now, with this as an assumption, do you think that Bank Indonesia can then return the interest rate to 3.5% level like that in what has happened in 2021 and 2022? And if it does happen, what will happen to the Indonesian stock market with the return of the low interest environment?
Yes, agreed that Bank Indonesia decision on the BI policy rate, yeah, could be determined by the global interest rates movement or development in the future. So looking at the assumptions that the Fed rate would be at around 3%, yeah, by 2026, I think it will imply that the BI has a room for the rate cut in the next 2 years. Yeah, taking into account that the U.S. economic or the lowering interest rate cycle started, yeah, this month. But Bank Indonesia needs also to consider about the condition in the domestic, yeah, meaning about the expectation in the inflation, and then of course other factors that affecting rupiah exchange rate in the near term, such as, for example, like current account deficits, yeah, and then also of course the fiscal deficit in the future. Of course, this is also affect rupiah exchange rate. Yeah. But I think I or the Fed reduces the policy rate to around 3% by end of 2026. I think this also, yeah, of course, Bank Indonesia has a room also to cut the interest rate maybe until around 4 to 4.5%, because again the message is that Bank Indonesia need to maintain the interest rate differentials in order to attract financial market inflows, yeah, to the from the portfolio investment. And then of course, other than that, there is of course the impact, yeah, to the global commodity prices, because earlier as I mentioned, because of the condition in the weaker dollar due to the forward looking of the interest rate cuts in US, I think the government also has to also consider about the potential increase in the commodity prices. And then from the Bank Indonesia perspective, I think with regard to the, of course, the macroprudential policies loosening stance, and then other than that also related to the SRBI, I think this is very also relevant, because before BI rates cut, I think BI introduced the SRBI issuance in order to attract foreign flows, yeah, because of the the limited issuance from the government, particularly global bonds. Yeah, so whenever the foreign investors started to invest their money to the bonds market currently, so I think BI has also to prepare the exit strategy, exit policies on the SRBI in order to maintain the financial stability. Yeah, so to hinder the crowding out effect.
Okay, well, thank you so much for that very thorough explanation, Pak Joshua. And of course, right now, the expectation for the rupiah is building up thanks to the Fed rates cut. How about the rupiah then? Do you think that Bank Indonesia can eventually bring back the rupiah exchange rate to 15,000 per dollars? What's your opinion on this?
Yeah, looking at the current development in rupiah exchange rate, I think last Friday rupiah closed around 15,100, and I think psychological level to the 15,000 level is very near, yeah, from 15,100 to 15,000. So I think it is not difficult to reach 15,000 level from the technical perspective. But of course, when yeah, the rupiah exchange rate, because Bank Indonesia adopts the managed floating exchange rate, meaning that we cannot force rupiah to strengthen in significant ways. Yeah, meaning that of course rupiah exchange rate still need to be maintained stable. Yeah, because from the business player perspective, for the exporters, of course, the sharp significance rupiah appreciation could be, yeah, of course, could be lower their revenues in dollars because exporters earn their revenues in dollars. However, on the other hand, for the importers would be happy if rupiah continue to strengthen. So the message is that Bank Indonesia still need to maintain the yeah, of course, the stability instead of the level of rupiah exchange rate. So we cannot force Bank Indonesia to let rupiah continue to strengthen. But of course, the rupiah again is driven by the fundamental side from the balance of payment forecast development, and then second one, of course, from the global economic perspective, yeah, looking at the first the global interest rates, and then of course the second one is the global geopolitical tensions. Yeah, of course this factor can also bring up the uncertainty in the future. So the assumption of the yeah, continuation in the Fed rate cut could be different if the geopolitical tension happening or re-emerge in the near term. So everything can happen, but of course, basically looking at the state budget 2025 that has been approved by Parliament, we've seen that government still more conservative, yeah, with the rupiah exchange rate assumption at the 16,000 level. So I think the government wants to be more conservative, looking at the situation in the next year could be dramatically changed due to the
Right.
geopolitical tension.
We're still on the wait and see for what's coming here for Indonesia with the next government coming in, but we'll have you back again next time for more insight. Thank you so much, Bapak Joshua Pardede, Chief Economist of Bank Permata. See you again next time.
Thank you.